USD ZAR outlook. Rand resilient as SARB leaves rates unchanged. The Rand is currently on its fourth consecutive positive day due to a combination of global and local factors. Bearish momentum has dramatically increased during this period, which may continue as interest rates remained constant and were not cut. The Relative Strength Index, RSI, has now fallen below the 50 level, which reinforces the aforementioned bearish bias. The 15.0000 psychological level now serves as initial resistance, with the 14.5606 61.85 Fibonacci level being maintained as the consequent support zone. This zone extends to the 14.5 thousand key horizontal level, which may be breached should the current economic outlook endure. Euro price action. ECB maintains policy. Euro remains at daily highs as widely expected. The ECB left monetary policy unchanged, with the depot rate remaining at 0.5% and the current pace of QE purchases maintained. The bank also reaffirmed the need for a current policy to remain highly accommodative for the foreseeable future. Although the ECB did note that if favorable financing conditions can be maintained with asset purchase flows that do not exhaust the envelope over the net purchase horizon of the PEPP, the envelope need not be used in full, which appears to be an apparent compromise for some of the more hawkish members. Gold price rallies into resistance, fueled by US dollar weakness. The price of gold turned sharply higher Wednesday, aided by a weaker US dollar, and the precious metal is now running into a cluster of resistance, which may prove tricky to overcome in the short term. Gold has gained around $60 from its low print on Monday and is now running into a cluster of moving averages between 1,854 an ounce and 1,874 an ounce. This area may provide stubborn resistance in the short term, with the CCI indicator also showing that gold is no longer oversold. If these simple moving averages are broken, the precious metal may retest the 1,921 an ounce area ahead of the 23.6% Fibonacci retracement at 1,928 an ounce. Initial support is seen at 1,837 an ounce. The 38.2% Fibonacci retracement level. BTC USD price forecast. Symmetrical triangle points to a build in momentum. Bitcoin has tried to hold on to gains over the last week, but has been unable to keep bullish momentum going. The cryptocurrency is down 3% at the time of writing and 19% off from the highs seen on January 8th. We saw an attempted bearish run on Wednesday afternoon, but price reversed at the 33,400 mark, meaning this is now an area of interest to see if sellers gain further momentum to bring BTC USD back down to 30,000. If we look at the daily chart, we can see how the market is consolidating whilst building momentum around current levels in an attempt to break in either direction, reinforced by the appearance of a symmetrical triangle. I expect the need to see a further pullback before we see significant bullish momentum build, which would then be a good time for new buyers to enter the market and push prices higher again.